Welcome back to the Talking Hedge. I'm Josh Kincaid, Capital Markets Analyst and host of your Cannabis Business Podcast. Today, we're going to take a look at U.S. cannabis sales as it's shifting during the coronavirus. We'll highlight Colorado, Washington State, and California, looking at the three key markets that are falling after initial coronavirus-related spikes. And that's amidst 29 states that have allowed for cannabis businesses to remain open during coronavirus pandemic with the stay-at-home orders. So consumer behavior is definitely going to change. Not really sure how. Probably the most obvious is going to be more online orders, looking at some discounts sent via text to get people to either have delivery if that's an option in the state, or at least pre-order in advance. Definitely going to be shifting, maybe even preferences from flower to edibles or vapes, already popular categories, but might see a shift away from flower as a dominant category. So this graph from MJ Business Daily is showing from the coronavirus's impact, how it's altering the adult use market, how people shop, as well as what they're buying. So again, we're seeing that edible sales have surged around coronavirus concerns, probably around not wanting to smoke. There's been a lot of issues, including underlying medical concerns with people who have smoked tobacco, and just to play it safe, people are probably shifting away from cannabis consumption or burning flower. So we are seeing bulk sales. So there's a dichotomy there. Are they just bulk buying and not actually smoking, but using edibles? I'm not really sure. We'll have to wait and see. What we're not seeing, though, is a lot of pre-rolls, and pre-rolls were always the number one SKU. Now, concentrates were an incredibly popular category, and flower, of course, is traditionally, the number one product sold for a category. But pre-rolls were sold a lot, and they're not. So that kind of is telling me that people are concerned about their health, about the burning, um, as well as maybe the lack of that puff pass option. A lot of pre-rolls were consumed as a way to share, and now that people are home, maybe they're just bringing out the bong or vaporizer instead of pre-rolls. Maybe the value isn't there either, as the bulk orders are discounted with, I've seen ounces discounted as much as 30%, anywhere from 15 to 55%, depending on the time of day and the brand. There are a lot of discounts leading up to 420 to get people to come in. So we've seen spikes in sales, but then dips as well. So I think all in all, those numbers are going to level out, as the pandemic caused people to go out and rush and hoard cannabis, wondering if the pot shops were going to remain open. Now that they've been deemed essential businesses in at least 27 markets, that has pulled back. So people aren't going out and buying stuff as frequently. And we're seeing that in everything, in normal day life too, grocery stores, Amazon, you name it. People are pulling back their frequency. So they might be buying the same amount of stuff, but they're buying more of it all at the same time and then waiting. So it's just basically a different preference of the way that they're consuming, but consuming the same amount. This may end up reverting back to pre-crisis levels, but it definitely was a shift that was rapid and significant. We're just going to keep tracking it as data comes out. In either case, we're looking at cannabis businesses throughout the supply chain that have to be able to pivot in order to stay relevant. So remaining incredibly flexible, being agile and capable of shifting in an evolving market. So looking at some of the headset data, it looks like they're inferring on the data on why consumers are purchasing what they are. It looks like, the edibles are not harmful to the lungs. So you're seeing those products obviously going up, and to the contrary, pre-rolls going down 2 percentage points across these three markets. And then high potency concentrates also declining in California, Washington, while topicals, which is a much smaller category, lost market share in all three states as well. So some of the key takeaways from that trend include that market share for edibles in California's rec market increased over 3%, and edibles are now almost 15% of the entire sales in California. Flower gained share in Colorado and Washington, while vape pen shares increased in California and Washington state. Flower and vape pens are both inhalable forms of cannabis, showing that consumers aren't going away from that market entirely. This is all in the midst of most governments around the nation deeming medical marijuana companies as essential during the coronavirus pandemic. This includes DC and Puerto Rico, all deeming that cannabis, whether it's medical or recreational, should remain open. Massachusetts is the only state that closed its rec stores. They're trying to reopen those back up. They did leave medical open, but that would be the one exception. Puerto Rico said that the U.S. territory deemed all medical marijuana businesses as a critical part of their healthcare sector and exempt from mandatory business closures. Washington State's governor had a stay at home order, including an appendix that identifies cannabis retailers and workers supporting the supply chain as essential. Additionally, the State Liquor and Cannabis Board issued an order allowing retailers to continue sales through curbside pickups. The board also clarified in a news release that the licensed marijuana businesses can continue operations and that the retailers will be allowed to sell to both medical and rec customers. So, I mean, it's important to know about curbside pickup because we don't have delivery, and to allow you to sell the product outside of the store is a big move. So hopefully that'll evolve into something more substantial, like a delivery option. It could be that the essential businesses have been the result of a dip in cannabis sales relative to the spike that we had. We are seeing some adult sales plunging, and now they're leveling out. So in these three key markets, we're still seeing cannabis sales fall in Washington, Oregon, and Colorado. There was a temporary sales spike in the recent weeks with people rushing to the doors to try and stock up, and the eventuality that cannabis shops would close. That didn't happen, and so people are kind of waiting. I think maybe just prioritizing different things, long-term food storage, maybe precious metals, gold and silver, maybe rent. Who knows? But they're probably spending the same amount of money. Just now that it's open, it's not as much of a priority. Trying to shift priorities, really. So for the last 5 to 6 days, we're seeing consecutive uh, days where there's been less sales. So that's kind of important because until now, none of the three adult use cannabis markets tracked by Headset have experienced declining sales over an extended period of time. So the latest drop is showing that the cannabis industry could be in uncharted waters, including the likelihood of a recession. Again, as people kind of reprioritize what they should be spending on. Not sure if it's a recession proof necessarily, but people will spend some similar portion of the amount of money on cannabis. We've seen that with gambling or alcohol, tobacco. Cannabis isn't going to be any different. It'll probably do a lot better than other sectors. But the slump has been particularly bad in Colorado. Sales over the past weekend were down 47% compared to the same weekend in 2019. So, in addition to people that may have been laid off or just kind of worried about how to spend their money, it's probably a lot has to do with the tourism or lack thereof. Entire industry has basically shut down, including ski areas. So, Colorado is feeling a lot less people. Probably not as bad as Nevada, which is completely shut down on the strip. First time I think ever that that's happened, where casinos and hotels are completely shut down. So they're seeing no sales. That's one of the worst markets hit. But in terms of a normal market, that doesn't rely too much on tourism, is still being impacted by the lack of tourism. So Seattle's seeing a lot less people come as well, coming at least less frequently. Last weekend in Washington State saw a 14% decrease from the same weekend in 2019, less dramatic decline in Colorado, but still impactful. So people are attempting to stock up for 2 weeks at a time. But places like California have also seen an increase in delivery and curbside pickup. So it might be less about finances and more about just the overall concerns and health. People really wanting to self isolate and stay away from crowds and not have to go out if they don't have to. So it might just involve fewer trips, maybe spending a little bit less or maybe even a little bit more, depending on who it is, which is why these numbers will probably average out over time. So while it remains to be seen, the current sales downturn might persist for the foreseeable future, or consumers might change the way they shop for cannabis. I expect a little bit of a dip before the 420 holiday sales and then a huge spike as people probably stock up even more. Hopefully, at that point, the spring coming in, nice warm weather, some of this pandemonium will cease and we'll come back somewhat closer to normal than we are now. But time will tell. So, with that, we're going to roll this one up. I'm Josh Kincaid. This is the Talking Hedge. Don't forget to like, share, and subscribe, or don't. And